And straight to top story, it's coming from European Union at a time debate is raging over taxing online giants Google, Amazon and various parts of the world. European Union leaders said they are looking forward to see proposals on taxing online giants by early 2018. But in nod to concerns from countries like Ireland, said EU efforts had to be in line with work underway at a global level. European countries are split over whether online companies such as Google, Facebook and Amazon should pay more tax, with smaller EU members such as Ireland and Luxembourg, which host many online businesses, worried that taxes would hurt their competitiveness without a global solution. Countries like Italy and France, on the other hand, are frustrated by the low tax rates online giants pay by rerouting profits through low-rate countries and insist the EU should go it alone if the Organization for Economic Cooperation and Development, which includes US and Japan, is unable to reach an agreement on a global solution. Now, meeting for an EU summit, the leaders said in their conclusions that they looked forward to appropriate Commission proposals by early next year. With an aim to keep oil prices steady, oil producers are working to build consensus on extending their oil production cut deal to reduce supplies, with the potential for continuation throughout 2018. Well, this is forming a basis for future talks. OPEC, which is Organization of Petroleum Exporting Countries, plus Russia and 9 other producers, they are cutting oil output by about 1.8 million barrels per day until March 2018 in an attempt to eradicate a supply glut that has weighed on prices. The deal has supported prices which are trading within sight of a 2-year high, but an overhang of stored oil has yet to be fully eradicated, and producers are considering extending the deal at their next meeting on November 30. Now, reports also said producers are leaning towards extending the deal for a further 9 months, though the decision could be postponed until early next year depending on the market. Oil prices are trading above $47 and they are half their level of mid-2014, prompting energy companies to cut back on exploration and producers to curb production. And as online giant Amazon gets ready for announcing a decision on its mega second headquarter next year, it is receiving offers of billions of dollars of tax breaks and other subsidies from cities and states across North America. There are billions in dollars that are being offered as tax breaks, and $5 billion plus investment has been planned by Amazon in its second headquarter. Well, up to 50,000 new jobs will be created with the new headquarter Amazon is planning to build in the US. And New Jersey, a state in US, has proposed $7 billion in potential credits as far as Amazon's second headquarter is concerned. And states in North America that are participating in a company contest to pick a location for its second headquarters are offering these billions of dollars worth of SOPs. Elected officials are eager for this $5 billion plus investment by Amazon, which will get up to 50,000 new jobs also. Now, for its second campus, Amazon wants a metropolitan area of more than 1 million people with good education, mass transit and likely lower cost than its home base in Seattle. New Jersey, as we told the viewers, has proposed $7 billion in potential credits against the other cities. And Amazon, if it locates in New York and sticks to hiring commitments, they will be offered more and more, we can say that, tax breaks. Reports said Amazon could claim some $300 million and a bill in the state's assembly introduced tomorrow. And it could offer Amazon $1 billion in tax breaks over the next decade. Amazon's need to compete for tech talent with Silicon Valley companies such as Google is likely to place the headquarter to price out of reach for some smaller cities. And staying with tech space, where in signs of lower than expected demand for Apple's new iPhone 8, its shares have come down by nearly 3% yesterday. Not a good news for tech giant Apple. Well, this has caused analysts and investors to question company's staggered release strategy for its latest iPhones. So shares were down nearly 3% yesterday. It is on the low iPhone demand that is slated to hit company coming forward. And Rogers Communication, a Canadian distributor, has also admitted to low demand which Apple's iPhone 8 and 8 Plus are facing. The phones iPhone 8 and 8 Plus, they went on sale in September. And latest phone and wireless carriers in the US and Canada have reported slow third quarter customer upgrades, which means that people are not preferring to upgrade to iPhone 8. So while some expect a pickup after iPhone X goes on sale in November, others caution that phones' high price tag could weigh on demand. CEO of Rogers Communication has already said that appetite for iPhone 8 and 8 Plus, which went on sale in September, had been anemic. Latest sign of a weak sales for those phones ahead of November 3 launch of pricier iPhone X. Now, Verizon Communications Chief Financial Officer Matt Ellis said number of third quarter phone upgrades they have fallen versus previous years, but that he expected an upgrade surge when iPhone X is released. So all hopes are on iPhone X now. And European plane maker Airbus has begun the maiden flight of its A330neo jetliner. It is an upgraded version of the profitable A330 family and is designed to sharpen competition with the Boeing 787 Dreamliner. The wide-bodied long-distance jet took off from plane makers Toulouse headquarters under overcast skies. The takeoff was watched by top executives from Airbus and Britain's Rolls-Royce, which supplies the engine. And as UK prepares for life post-Brexit, British PM Theresa May has promised to cut red tape and cost for EU citizens wanting to remain in Britain after Brexit. Theresa May will address EU leaders, and in an open letter on Facebook, she told EU citizens in Britain that their status was her first priority and the government was in touching distance of agreement with EU negotiators on their rights. Negotiations are ongoing over what rights EU citizens remaining in Britain will have with regards to family reunions and social benefits. EU officials have also pressed for their rights to be protected by the Court of Justice of EU. A red line for May's government. May said she was trying to ensure that EU citizens who have paid into the UK system can benefit from what they have put in. May will address EU leaders, and the state of negotiations will also be discussed during a working dinner in Brussels. Well, May is going to encourage the people and EU, the Brussels, to move to conversation on a future trading deal. And news from global auto space, where in a brief respite for embattled Japanese steelmaker Kobe Steel from the scandal it is facing in Japan and other parts of the world, Toyota Motor of Japan has cleared aluminium parts supplied by Kobe Steel of safety concerns. Now, companies around the world are rushing to check the safety of their products following revelations of data falsification. Honda Motor and Mazda Motor also gave an all-clear on aluminium parts supplied by Kobe Steel. Japan's biggest automaker is broadening its investigation beyond aluminium as far as Toyota is concerned, to include copper tubes, steel wires and steel powder used in its cars. American manufacturers, including automotive giants Ford Motor and General Motors and nation's biggest plane maker Boeing, are among 500 companies worldwide affected by a supply chain tainted by admissions that Kobe falsified certification on the strength and durability of metals going back to at least 2007. The company had added 9 items of its list of affected products, making 16, and said it was still checking the safety of 5 of them with customers. Whilst Kobe Steel had already deemed the other 4 safe, the units implicated in the crisis make the steel, copper, aluminium and other materials that account for over half of company's revenue. And another big auto recall coming, this time from US auto major Ford, that will recall its Explorer SUVs over carbon monoxide poisoning concerns. Center for Auto Safety is urging Ford to pull more than 1.3 million Explorers off the road. Ford announced it is offering free inspections and repairs to reduce the potential for exhaust to enter vehicles. But the company insists its Explorers are safe and said the offer is for our customers' peace of mind. The Center for Auto Safety is calling on Ford to recall all of its 2011 through 2017 Ford Explorer SUVs. The National Highway Safety Traffic Administration, or NHTSA, in US is investigating more than 2,700 complaints about possible carbon monoxide in Explorers, including reports of 41 injuries and 3 accidents that may also be linked. In July, police in Austin, Texas parked more than 400 Explorers after nearly 24 officers were found to have high levels of carbon monoxide in their blood. Now, across the country, Ford has been repairing the Explorer police cruisers at no cost. But Ford says the issue is separate from the complaints in civilian models and due to modifications of vehicles after they were purchased, like installing emergency lights. And moving over to India's story, where the country is tightening quality controls for consumer and capital goods. Officials say a move, it will follow calls to curb cheap imports from China amid diplomatic tensions between the world's 2 most populous nations over their shared border. The new rules target toys, electronic goods, machinery, food processing, construction and chemical sectors dominated by China currently, and come amid greater scrutiny of mainland firms looking to enter India's multi-billion-dollar power transmission and telecom business. Now, for India's toy retailers who import everything from toy cars to musical phones and even robots from China, the new requirements have meant supply disruptions just ahead of a coming festival season and a coming year-end season. The Government of Bureau of Indian Standards, or BIS, has approximately 23,000 standards across industries. Now, many of them are never fully enforced. Now, government departments have been asked in India to carry out laboratory tests and spot inspection to ensure goods conform to the regulations. The new rules apply to both foreign manufacturers and even domestic firms. And worrying that rising consumer prices will threaten Indian Central Bank RBI's inflation target of 4% led the majority of RBI's Monetary Policy Committee to vote to keep rates steady, according to minutes of the meeting issued. Now, committee members also said at their October 4 meeting they expected that a slowdown in economic growth to its lowest more than 3 years in the April-June quarter could prove transitory, and it was prudent to wait for more evidence. Reserve Bank of India's 6-member Monetary Policy Committee voted 5-1 to keep the repo rate unchanged at the October 4 meeting, and its minutes of meeting have been released now. Now, after inflation in August surged to 3.36% from a year earlier, not far off from central bank's 4% target. However, data after meeting showed inflation held steady at 3.28% in September, in line with the downwardly revised number for August. Although analysts say the expected repo rate to remain unchanged for now. Now, let's look at the markets, how the global markets have fared in the Samvat 2073, which is Hindu calendar last year, and now we are starting with the new calendar today onwards. But if we see in the last 1 year, from Diwali to Diwali, Dow Jones of US up 27%, Hang Seng of Hong Kong, second best market, up 25%. The Tokyo Index Topics was up 23%. Korea's Kospi was the fourth best, giving, we can say, index. It returned 22%. And India's Nifty, it came fifth, giving returns of 18% in the last 1 year on an average. So that's what the overall markets have performed in the last 1 year. Sensex is up 18%, another fifth at the spot. Jakarta Stock Exchange was up 8%. In Asia, it's another second top gainer as far as the stock markets are concerned. Shanghai Stock Exchange was also up 8%. London Stock Exchange came at around 9th place. FTSE 100 index was up 7%. So overall, Indian markets have behaved very good as compared to other global markets in the last 1 year, from last Diwali to this Diwali in Samvat 2073. Today onwards, we are now into Samvat 2074. And to talk more on this, we are joined by our analyst Vivek Karwa from Chennai. Good morning to Mr. Karwa. First of all, we would like to ask you about Muhurat trading yesterday. How did it go, and what were the main picks and what were the main points as far as Muhurat trading was concerned that took off from 6:30 p.m. and went for 1 hour.
Good morning, Sumit, and wish you and your viewers a very happy Diwali and a prosperous New Year. Now, yesterday, the market was on leave daytime, and we just had 1 hour of trading. But being auspicious day, the market shouldn't have gone down. But yes, coupled with global factors and the noises from global arena, took the market down. Within 1 hour, market almost closed, Sensex almost closed like 190 points down. And at one point of time, it was almost like 230, 250 points down. So there are various factors which led to this. And as I've been always saying, the valuations are definitely a bit on the stressed side. And hence, that also brought in more selling yesterday. So let us hope that New Year would be good. And whatever had done was done yesterday.
And Mr. Karwa, global markets, Asian markets are trading mixed, if you can see. And if we talk about the other markets, they are also pretty much in green. The European markets, they were in red. So what is the big, we can say, that event that should be looked out for as far as global markets are concerned?
Basically, these were the factors which brought the market down yesterday during model trading also. The first reason was, of course, North Korea has again started speaking something which is not favorable to markets. And the European markets also were lower yesterday, coupled with confused markets in Asia. And I think even Dow Jones was a bit weak. So these factors, and now, so one is North Korea factor, and then the Spain's this one political tension which is going on over there. So that also had put pressure on the market. Now, see, this is a situation wherein when the valuations are high, market always looks for reasons to correct, and these reasons can come from any place in the world. So these factors are, of course, could be temporary. We have seen that North Korea has been making noises since very long. But how far will it go is another question mark. So the moment markets, if hopefully they stabilize today, global markets, and if they stabilize today, I think Monday we might again pick up. Now, one more big negative factor which again pulled markets down in India is the numbers of Axis Bank, particularly. And that spooked the Bank Nifty and BankX totally. And the whole banking sector and NBFC sector was a bit down. Now, this also I've been saying on your show that financials are really costly and certain banks are really costly. And hence, Axis Bank also was a sort of trigger for the banking sector to correct as a whole. So overall, yes, there was negative sentiment, and hence market came down. But again, as I have been going on saying, there is a lot of liquidity in the market, and liquidity would again come back to the market the moment there is small correction. So people are waiting to buy, and as and when there are value buys available, people would come in. Now, one more thing is market overall, it is not overstressed totally. There are pockets of undervaluations even now, and investor has to really do good homework this Samvat so that he makes good money by next Diwali.
All right. And also, if we ask you going forward, the future outlook, how does it look as far as the markets are concerned? Well, markets are hovering around 32,000 level now, Sensex is concerned, and Nifty is also within 10,000 range. So do you expect them to touch record highs and 35,000 level as far as Sensex is concerned, and around 12,000 level as far as Nifty is concerned? Do you see that happening anytime soon?
In fact, Sumit, I am a born bull, I should say, and born optimistic as well. So what is going to happen is, as and when there are corrections, buying is going to emerge. And I feel that, yes, Indian markets would touch newer highs. Now, if you seriously look, no, even in, say, Sensex companies, out of 30 companies, if you take 4 or 5 companies out, like Tata Motors, like Axis Bank, certain this kind of companies, you will find that the earnings are about 20%. Now, we keep talking about earnings, and what is happening is these 4 or 5 companies are alone bringing the earnings down of Sensex and Nifty. And if you take them out, the earnings are really very, very good. So what is going to happen is market would, the Sensex would keep touching high, Nifty would keep touching newer high. And one small correction is always needed because the fraud, whichever is there, always gets cleaned the moment corrections happen. So corrections are also good, and we should never climb the ladder straight line. I think up and down is always better. And that keeps the volatility, in fact, on the lower side for a longer investor, I mean the long-term investor. So outlook is bullish. Yes, valuation short-term could be costly. So even if Sensex and Nifty correct by say 1,000 points and 2,000 points, I won't be surprised. But then that would really be a good buying opportunity for the long-term investors.
All right, thank you, Mr. Karwa, for talking to us and getting us all these details and this important perspective. Today, the markets are shut in India. Globally, they are still open. And that's all today we have in this edition of WION Wallet.